Here on the Transparent FX Academy, every day I share my best market breakdowns to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I will be speaking about US oil. Now, why do I want to speak about US oil? Because at the moment we have very interesting price action. So I will be providing a complete top-down analysis, and as usual, I will be keeping it as educational as possible. Starting here from the monthly time frame, what we can see is that at the moment the market has just broken above a quite important structure level. In fact, this zone was acting as very strong support here. The market then broke it to the downside. At that point, it started acting as resistance here, again resistance here, again resistance here, again resistance here. We then got the break above this resistance, and all this previous resistance was turned support here. And as we are currently testing this previous resistance turn support, we can definitely expect more continuation to the upside, possibly even for the creation of a higher high. Now, after an impulse in general, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market has retraced exactly to the 0.618 golden ratio of the Fibonacci taken on the monthly impulse, which is a quite strong support zone that we do expect once again the market to reject to the upside with the creation of a higher high. Going down on the weekly time frame, what we can see is that here in the weekly we are once again seeing very strong bullish price action. Now we do have slight resistance at this previous support, now turn resistance here, from which we can expect a rejection to the downside before then seeing more continuation to the upside. So by putting together the monthly and weekly, what we can take is that it seems probable to see short-term bearish price action before then longer-term bullish price action. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, what we can see. Now here in the daily time frame, we can see that at the moment we have just broken above structure. In fact, this previous high was acting as resistance. We now broke this structure resistance to the upside. And as you know, in the market, previous resistance, once it is broken to the upside, is turned support, which means that in this specific situation, if we will see a retest of this previous resistance turn support from here, we could expect continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, it's clear that at the moment we have the 0.382 Fibonacci retracement lining up with this previous resistance turn support, creating a strong confluence of support that we can expect the market to test before a potential rejection to the upside, which means that inside of here, this is the area that seems more interesting for a good risk to reward opportunity if we will get a correction from then from that area, seeing the market providing a continuation to the upside. So the way in which we will be approaching this specific situation with students is as usual being reactive and not predictive. The monthly, weekly, and daily time frames, those are the best time frames that from a directional perspective provide the higher probabilities when they're all showing the same direction, which in this case is obviously on the long side. However, you then have to wait also for the proper confirmations in order to increase the probabilities of that direction to actually come. So if we will see a retest of this area inside of here, what we will be doing is monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding US oil to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to possibly provide and create a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in the description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.